Welcome back to the Deep Dive. You've given us a stack of sources on a really interesting project, Zebec Network, ZBCN.
That's right.
Our mission today is, well, to cut through the noise. We've got material that's everything from these huge institutional announcements to, frankly, some really skeptical community chatter. We need to pull up the foundational facts here, figure out what's driving both the hype and the skepticism around this real-time payment infrastructure.
Yeah, this is a perfect example, I think, of that collision we're seeing between, traditional finance compliance and the potential of Web3. Zebec Network, started back in 2021, operates as decentralized infrastructure.
Okay.
Its main purpose is programmable money, basically trying to revolutionize things like payroll, remittances, all this financial flows, making them happen in real time.
Right, real time.
And what's key here is, while it began on Solana, it's really pushed a multi-chain strategy, expanding onto Ethereum, L2s, BNB chain, Near, Base, quite a few.
And the scale they've hit already, I mean, it's kind of hard to ignore. Looking at data from, mid-2025?
Yeah, around June.
Zebec's payroll feature was doing over $40 million in volume. That's serving more than 11,000 employees.
Which is solid.
But the one that really jumps out is the Zebec cards data. Over $46 million in volume across 11,000 cards issued. And get this, 70% month-over-month jump.
That 70% jump, that's the indicator you look for, right? Suggests real product market fit, not just hype.
Yeah.
You don't usually see that kind of growth just from marketing. It suggests something's clicking, maybe aggressive expansion, maybe solving a really specific pain point for users, or perhaps a big enterprise partner coming online.
Whatever drove it, it's a sign.
Definitely. It suggests that their focus on institutional credibility, which is our first major theme here, is starting to show results.
Okay, so let's start right there then. Zebec seems to be playing the compliance first game. What's the biggest signal they've sent to the TradFi world recently?
I'd say the biggest one came in November 2025, their official Circle partnership.
Circle.
Zebec joined Circle's Arc Testnet. Now, the significance here isn't just like a standard collaboration. The Arc Testnet is a regulated institutional network. It includes giants like Visa, MasterCard, State Street.
Oh, okay. Big names.
Exactly. So this puts ZBCN in a position to explore compliant, permissioned USDC payment rails. That's essential for large-scale enterprise adoption because those guys often can't just use public blockchains.
That distinction is key, isn't it? Moving from the public permissionless world to these permissioned institutional rails. That builds trust.
Absolutely crucial for regulated partners. And speaking of trust, regulatory clarity is always a huge factor in this space. Often make or break.
So how are they doing on that front?
Pretty well, actually. In October 2025, the SEC issued a no-action letter. It concerns certain depend tokens, decentralized physical infrastructure network tokens like ZBCN.
A no-action letter. What does that mean exactly?
It means the SEC essentially stated they view these specific tokens as network incentives, not as unregistered securities.
Okay, that's big. I remember the market reacted pretty strongly to that news.
It did. There was about a 28% rally that week. But beyond the price jump, functionally, it unlocks quite a bit for ZBCN.
Like what?
It massively reduces the legal risk hanging over their decentralized payroll system. It means they can push forward, expand into more regulated areas without that constant fear of securities lawsuits about, transaction fees or network rewards.
Right. It's the green light needed for regulated partners to even seriously consider building on their network.
Exactly. It's assurance.
And they're definitely not shying away from the security certifications either. That's essential if you want regulated entities on board. They got SOC2 Type 2 certification back in September 2025.
For both payroll and cards, yeah.
That sounds like a major undertaking.
It is. And they followed it up pretty quickly with another smart move, acquiring GateKnox.
GateKnox, remind me.
They're an AI-powered KYC ML company. Know your customer, anti-money laundering.
Okay. Compliance tech.
Right, so this isn't just about ticking a box for auditors. They're actually integrating these compliance checks directly into the payment flow itself.
That sounds efficient. And how does this GateKnox acquisition tie into the whole real-world asset or RWA tokenization trends?
Good question. That's the strategic link. The on-chain RWA market is already valued around, $35.5 billion.
Yeah.
And it's growing fast.
Definitely an odd area.
But the biggest hurdle for institutions getting into RWAs is trust. Trust in the underlying cash flow, certainty about who you're dealing with.
Makes sense.
So by getting SOC2 certified and then embedding Geeknox's KYCML right into the payment streams, Zebec is essentially building the compliant plumbing needed for tokenizing real-time cash flows. They're solving that institutional need for verified identity and, clean money movement.
So it positions them to grab a piece of that growing RWA market securely.
That seems to be the plan.
Okay, this compliance push sounds expensive. Audits, legal reviews, acquisitions like Gateknox. Is this sustainable for them, or is it just a huge cost they have to eat to survive?
Well, it's certainly a calculated gamble, a big investment. Their roadmap even targets ISO 27001 certification by the end of 2025.
ISO 27001, the global standard for information security, right?
Exactly. They're essentially spending today's resources to build this regulatory moat. Something traditional players might struggle to replicate quickly in Web3, and frankly, something many Web3 native projects haven't bothered with.
A compliance mode. I like that.
The bet is that this moat will eventually attract massive institutional volume, making the upfront cost worthwhile.
A compelling strategy.
Yeah.
But like you said, the institutional play only works if adoption actually follows. Let's pivot a bit to growth catalysts. Things increasing visibility, transaction volume. The market definitely noticed the Kraken listing confirmation back in October 2025.
Oh yeah, that was a significant liquidity event for them. Triggered, I think, an 80% jump in trading volume. And the price climbed about 21% leading up to the actual listing.
So getting on major exchanges like Kraken helps broaden their reach.
Absolutely. It opens the door to a much wider pool of potential investors and users beyond the exchanges they were already on, like OKX and Crypto.com.
And speaking of reach, their ecosystem seems to be spreading out too. The Zebec cards now support 15 different blockchains, including newer ones like Algorand and Octaspace from the summer.
That interoperability piece is critical for any payment layer aiming for broad use. People need to move funds easily across chains.
Right.
But if we're talking real-world use and, importantly, recurring revenue, we really have to look at their payroll partnerships.
Okay, tell me about those.
Well, there's a collaboration with Payroll Finance. That's for on-demand payroll lending using USDC. Pretty clever utility there.
Interesting niche.
But the really big one, the potential heavyweight, is the collaboration plan for Q4 with Azure Software.
Azure Software.
Yeah.
They're big in the U.S. payroll space, aren't they?
Very big. They target over 4 million U.S. payroll users.
4 million potential users. That's massive.
Yeah.
But let's push on that a bit. Does Zebec replace Azure's system, or is it just like an optional feature? How many of those 4 million are realistically going to use Zebec SIM?
Good question. It's definitely an augmentation, not a full replacement. Zebec typically comes in as an option, offering instant or programmable payments alongside the traditional methods.
Okay, so it was a choice for the employee or employer.
Right. And industry analysts looking at this suggest that, realistically, converting maybe 5% to 8% of that 4 million user base in the first year or 18 months would be a huge win.
So roughly 200,000 to 320,000 users.
Exactly. Even that smaller percentage translates into enormous, predictable, recurring transaction volume for Zebec.
So they're embedding themselves right into the daily financial plumbing.
That seems to be the strategy.
Okay. And one last quick thing before we get into the skeptical arguments. The token structure itself. They did that migration, ZBC to ZBCN, back in March 2024.
Right, the 1.10 migration. That was mainly to simplify things like gas fees and governance.
And it resulted in a cap supply of 100 billion ZBCN tokens.
Yes, and that 100 billion figure. That leads us perfectly into the skeptical side of the discussion. It's a major point of contention in the community debates.
Okay, let's unpack that. The structural debate sounds intense. Critics aren't just nitpicking features, they're questioning the very foundation.
Pretty much.
The main line of attack seems to be that ZBCN is, well, structurally flawed. Some critics even call it a garbage coin. Why? Because it relies on Solana. It's not its own native layer one. And the argument is this prevents them from achieving true decentralized ISO level compliance. So that's the gist.
That's the core of it. It's that classic crypto dilemma, decentralization versus compliance. The critics argue that if Zebec ultimately settles transactions on Solana, and Solana itself isn't ISO compliant or maybe has points of centralization,
Zebec can only be as compliant as its base layer.
Precisely. For some institutional purists, real bulletproof compliance requires controlling the entire stack right down to block production. And that usually means needing your own dedicated layer 1 network.
Okay, but the Zebec proponents have a counter argument, right?
Oh, definitely. A strong one. They argue that being a layer 2 or multi-chain is actually the smarter design for what they're doing, high volume, real-time payments like payroll.
Why smarter?
Because layer 2s are often optimized for speed and low cost, moving lots of small transactions cheaply, something a highly secure, potentially more complex layer 1 might struggle with efficiency-wise.
So horses for courses, basically.
Kind of. And they point to things like the GateKnox acquisition, the SOC2 cert, the backing from, 33 institutional investors?
Yeah.
They say that validates their compliance strategy regardless of whether they're an L1 or L2. The proof is in the partnerships and certifications they're actually getting.
Makes sense. It's an argument about what matters most. Architectural purity or practical compliance recognized by institutions.
Exactly. And then there's the tokenomics debate you mentioned. That 100 billion max supply for ZBCN gets flagged constantly by critics.
How come? What's the comparison point?
They often compare it to competitors also targeting enterprise compliance, like XDC Network. XDC has a much smaller total supply, and crucially, XDC has these really high staking requirements for its nodes, like 10 million tokens just to run a node.
Okay, 10 million tokens.
Yeah.
Why does that structure appeal more to the, let's call them compliance hardliners?
Because requiring nodes to stake so much, plus undergo strict KYCML screening like XDC does, creates a very restricted, you could almost say pseudo-centralized network foundation.
Which means it's highly controlled.
Exactly. And for big institutional money, control often equals security and compliance certainty. The criticism of ZBCN is that its large supply and potentially lower barrier to entry for nodes might dilute that sense of tight control.
Even with the SOC2 and GateKnox pieces.
For some critics, yes, they see the underlying network structure as paramount, potentially overriding application-level compliance efforts.
Are there other common structural worries about Zebec we should touch on?
Yeah, there's the ever-present threat from the established fintech giants, the PayPals, the Stripes.
Right, who are now getting into crypto themselves.
Aggressively. The question is whether they can just leverage their massive existing user bases and their fully centralized, already compliant systems to basically leapfrog Zebec.
That's a fair concern. Existing network effects are powerful.
Definitely. And another point sometimes raised in the community is about the long-term transparency around token distribution, especially for those early institutional investors. That can sometimes be a hidden risk factor if market conditions change.
Okay. So wrapping up this section, it really boils down to a key question. Can Zebec's verifiable compliance wins SOC2, GateKnox, Circle Testnet outweigh the structural skepticism about its layer 2 status and token supply, especially in attracting that big institutional money?
That is the core tension, absolutely. And the market is actively trying to price that in right now.
All right, let's turn to the charts and market sentiment for our final segment. The general feeling is often described as bullish with caution.
Sounds about right.
The technical picture looks pretty mixed, especially after that sizable 31.45% drop over the last month, as of early November 2025. Although we have to remember the yearly gain is still huge, like 268%.
Yeah, context is important. Looking at the specifics in early November, the price has definitely pulled back. It's nearing some key support levels, roughly in the 0.000040 to 0.0043 range.
Support levels, okay.
And we've seen the relative strength index, the RSI, dip below 30 pretty often recently.
Which usually means?
Textbook oversold. Suggests that, technically speaking, a relief rally or a short-term bounce is looking quite possible.
That's the caution part. The shorter-term moving averages are still generally pointing towards a sell signal. It suggests any bounce might face resistance.
Right.
And of course, technical indicators can get wiped out quickly by bigger factors. If global market liquidity suddenly tightens, or if there's news about a large chunk of investor tokens unlocking soon, that could easily override a simple RSI signal. So always need to weigh the fundamentals alongside the charts.
Always.
Okay. For listeners thinking longer term, what are some of the forecasts saying? Keeping in mind this is just context, not financial advice.
Well, some of the AI-driven models looking out further suggest ZBCN could potentially reach the $0.01 mark sometime between, say, 2027 and 2029.
A penny, okay.
And then the really optimistic, blue sky scenarios, assuming they really nail the RWA and payroll execution, those see the price potentially hitting 0.55 cents by 2030.
5 cents.
Yeah. So these long-term projections basically echo the overall narrative. If Zebec successfully converts these partnerships and compliance wins into real, sustained transaction volume, it's generally seen as having potential as a long-term investment.
We've covered a ton of ground today. Let's try and synthesize the key takeaways for you listening.
Yeah.
Zebec Network is making very real, verifiable moves on the enterprise compliance front.
Yep, the Circle Arc testnet inclusion, achieving SOC2, buying gate knocks, those are concrete steps.
And this is all designed to fuel their utility in real-time payroll, aiming for potentially millions of users through partners like Azure Software, and also to carve out a secure niche in that booming RWA tokenization market.
But the core challenge really boils down to execution and, maybe just as importantly, overcoming that structural perception issue.
Right.
They have strong momentum with regulations and partnerships, but the network absolutely has to translate these wins quickly into widespread, ongoing user activity and transaction demand. That's the only way to really outpace rivals and answer those critics questioning the L2 structure and token supply.
The competition for institutional trust is fierce, which leaves us with a final thought for you to chew on.
Okay.
Given ZBCN's clear strategy as this compliance-focused bridge between TradFi and crypto, will its aggressive pursuit of global security standards, especially that upcoming ISO 27001 certification, actually give it a decisive first-mover advantage? Will it unlock the institutional floodgates?
Or will market volatility and those lingering debates about layer 1 versus layer 2 keep holding back adoption, even if they manage to tick every single institutional compliance box?
Something to definitely keep an eye on as Zebec moves into 2026.
Indeed. It'll be fascinating to watch.
Thank you for joining us for the deep dive. We'll catch you on the next one.